Welcome back to Mastering Money on Money Radio, where financial success is not only possible, but highly attainable. I'm Sinclair Noe, and today on Monday, Steve takes a little break, but our bench is deep. And stepping in for Steve, one of the nation's leading precious metals experts, Mr. Nick Grovich with American Federal, Rare Coin, and Bullion. Published author, a familiar voice here on Money Radio as well, the host of Good as Gold every Thursday afternoon, 1 to 2.
1 to 2 o'clock.
1 to 2 o'clock, absolutely. And it's time now for our Getting Smart segment. So what do you say we get smart about mastering gold?
Let's try and get smart.
Maybe you can answer some questions for me.
I'd be glad to.
What the heck is going on in these markets?
I don't know the answer to that, but I think it's scaring a lot of people.
It really is, isn't it?
I can see that by the amount of phone calls that come in. You know, when people are making a lot of money in the stock market, our phones are a little quieter.
Right.
When they start losing money and seeing their statements go down, all of a sudden our phones get a little busier. They start looking for alternatives.
So you're seeing the fear among investors, and they're looking for that safe haven move. And gold has traditionally been the safe haven.
Yeah, and I think that's what most of it is. I don't think they're looking to make money. I think they're looking for something that's just safe, that they don't feel they're going to lose a lot of money on right now. Somewhere to park their money and maybe make a little something while it's parked there.
Well, part of the problem for many people is if they're looking to park money, where do you park money? You're not going to make much in treasuries. You're not going to make anything really parking it in a bank, or in a CD, maybe a little bit in treasuries, but if you're doing it short-term parking, next to nothing there.
Right. So they gold's been down a little under $1,000, right around $1,100 for quite a while now. So a lot of people feel like it's a safe place to go, and maybe there's a little bit of upside on it right now. I can tell you our sales from last year at this time are up 10 times, maybe 15 times.
Wow.
So it's not because I'm out there telling people to sell their stocks and buy gold. It's them calling me and saying, "Hey, I want to put a little of my money somewhere else." That's a huge increase.
That is a huge increase.
Because there's nothing usually you see increases like that when gold's gone from 1,000 to 1,200 to 1,500, and everybody's jumping on the bandwagon.
And we have seen a relatively small increase in the price.
Yeah, it hasn't been anything earth-shaking.
I'd say maybe $40, $50, something like that.
Right, not enough to get that excited about.
No, that could happen any given week.
Right, and part of it might be, too, with everything going on economically. You know, for a while, everyone was looking for $1,000 gold. And when gold wasn't doing anything, they were happy to just sit back and wait and see if it hit $1,000. That's what all the experts were saying.
Right.
Well, all of a sudden you start getting scared, and you don't worry so much about saving that last $40 or $50. You just want to buy the gold.
Good point. And we talked about the idea that gold probably was getting near some sort of a bottom just based upon some real fundamental issues.
Right.
Like how much it costs to pull it out of the ground, how much supply there is in the world. Gold actually costs something to produce.
Right. It costs something to pull it out of the ground and get it into that coin or bar form. So at some point they can't afford to do that. And
they either stop producing those coins or the bullion or whatever. And if that happens, then price is going to go up. And there have been some cutbacks in production.
Yeah, and we remember last summer we saw a lot of the premiums, the price over the spot price that you have to pay for a gold or silver coin were really, really high last year. So even though gold was down, you were paying more for it.
Which kind of also was another indicator that maybe there was something along the lines of a bottom taking place.
Right. That happens frequently.
Because people just aren't going to give up their gold, even if it's not just a matter of production. A lot of people are holding gold. They're not going to give it up without a premium.
Right. That's right. They're not going to sell it unless they get a little something extra for it.
But if there is indeed that premium taking place, are we seeing a premium now?
Well, what's actually interesting right now, I think part of this is because it's the beginning of the year, so the mints are all they're ready for the beginning of the year. They're ramped up for production.
Okay.
The premiums right now are actually as low as they've been in a long time. So it's kind of nice. The price is up a little, but the premium's down. So you're still not paying much more than when gold was $20 cheaper.
Okay.
So that doesn't happen that often.
It works out though.
Yeah. Usually when people are buying like they are right now, the mint raises the premium instead of lowers it.
But they're not doing that now. So
haven't done that.
And there is availability.
And there's availability right now.
What are you seeing as you get into more rare coins away from just the pure bullion coin?
I'm seeing just the opposite happen in the rare coins. And when I say the rare coins, I'm talking more about the more common rare coins. Does that make sense? The St. Gaudens,
Yeah,
the
sure,
$20,
St. Gaudens, yeah.
the coins that are really highly promoted.
There's some numismatic value there, but there are a lot of them out there.
Right. And the numismatic value is what keeps dropping off. You know, for the last 20 years, I've been saying those coins are going to go the way of European coins. You can buy 100, 200-year-old European gold coins for a couple dollars over what the gold's worth. And they're no more common or no more rare than the St. Gaudens and 20 Liberties. So in my mind, I kept thinking, well, there's millions and millions, tens of millions of the $20 gold pieces out there. Why are they worth double the price of gold or 50% more than the price of gold when their European counterparts are worth $3 more than the gold? And that's really what's happened over the last 20 years, is that collector premium keeps disappearing.
So you're saying go out and buy some European coins?
I think if I was buying bullion, I'd buy those or the American Eagle or so, yeah, because they actually trade as bullion coins. So you're buying them based on the gold, not on the collectability.
You've been talking to us for some time about this idea of owning the bullion coins because it's just pretty much a straight play on the precious metals.
Yeah, I think that's the safest way to do it. You're taking maybe a 3 to 5% risk on the turnaround, the buy and sell. But you're not paying hundreds of dollars for some collector premium that may just disappear.
So if you take away that premium, and that premium is kind of I'm not sure how to describe it, but it can float. It's subjective.
It's subjective. And, a lot of dealers say, well, gee, the premiums are so low. They're historically low right now. So you'd want to buy those for when the premiums go back up. I just don't know what's going to ever make them go back up.
Can you think of anything?
No, I can't, because there's just so many coins out there, and that's what's killing the premiums. There's just more coins than the dealers can sell.
So stick with the bullion.
Stick with the bullion. Keep it simple.
Okay. And you have access now. There is availability now.
Yes, there's availability on Eagles, Buffaloes, Maple Leafs, just about any of the bullion coins.
Folks can contact you at American Federal.
American Federal.
Rare Coin and Bullion, Carefree, Arizona.
Carefree, Arizona. On Easy Street. I knew you were going to say that.
I just love that. Up in Carefree on Easy Street, or if you're not driving up to Carefree or something like that, check out the website, AmericanFederal.com. AmericanFederal.com, or you could call and ask questions.
You can call 480-553-5282.
480-553-5282. 480-553-5282. AmericanFederal.com. We will continue this conversation with Nick Grovich from American Federal Rare Coin and Bullion in just a moment. Stick around. In case you're just joining us, I'm Sinclair Noe, and you're listening to a special Monday edition of Mastering Money. Steve Jurch will be back with us in just a few minutes. In studio with me now, published author, one of the nation's leading precious metals experts, Nick Grovich. Nick, good to see you again.
Good to be here.
I mentioned you're a published author, your book.
Right.
Can we give away some?
Big
you know what I'm
Lies
getting
and
to
Absolute.
there.
Yes, we can give some of those away. The Big Lies and Absolute Truths.
Maybe 5?
Sure, that'd be terrific.
Okay, 5 copies of The Big Lies and Absolute Truths about the precious metals markets. 480-553-5282. The next 5 callers get a free copy.
That sounds like a good idea.
480-553-5282. We've been looking at this market, and I started out by asking you, what's going on in this market? Nobody really knows.
Nobody knows.
But it has we have some previous bubbles, and we have some previous market sell-offs, and it feels a little bit like, not quite like 2008.
Right, not quite, but it's scaring people.
It's enough to, if you remember 2008, this will scare you.
Right.
Not quite 2000 when we had the dot-com bubble going on. That was a little bit different. A little bit of similarity, though, to 97 and the Asian contagion.
Right. Back in 90, I guess 95, 96, 97, that's when Asia was the hot and upcoming spot. Everybody was putting money there.
We were talking about the tiger economies.
Right. And now they're calling China the paper tiger. So, it does kind of feel the same. China was coming out roaring ahead. Everybody was dumping their money in China, and the last 6 quarters they've been pulling money out as fast as they can. It's just like what happened in 97.
There seem to be some similarities. You had, now back then it was Thailand. That's where it started.
Right.
That's where things started to fall apart.
Right.
The Thai baht
that got to be a bad word.
Yeah, real bad word. But it spread over to Malaysia, Indonesia, Taiwan, North Korea. Part of that happened when China devalued the renminbi.
Right.
And basically it had these up-and-coming emerging market economies in Southeast Asia, and all of a sudden there was this slowdown. China devalued, and they were sitting there going, uh-oh. It was like Wile E. Coyote going over the cliff.
Right.
They look down, the legs are still spinning, but there's no more.
Nothing underneath it.
Yeah. It almost feels a little like that, not necessarily Thailand and Indonesia, but emerging market economies. And we're seeing that a lot of that as it applies specifically to commodities, specifically this time around to oil.
Right.
But it's affecting all the commodities, and we've seen that spread out to the mining companies as well, I think.
Well, it is affecting a lot of the mining companies because they're cutting back on production on industrial metals.
Mm-hmm.
So it's really hurt that market. I mean, we look at platinum, palladium; they really got killed. I do like those metals, but they really got killed by this. It's causing people to look and they're getting concerned, and I think they're starting to buy gold and silver as, like we were talking about, just kind of as a safe haven.
Why do people buy precious metals as a safe haven when we see this kind of economic breakdown?
Well, as the currencies, of course, get less valuable, then gold and silver have to become more valuable, because really gold is just another currency. But it has a reputation for holding its value. I mean, if you bought it 1900, it didn't do a great job of holding its value.
No.
But long term, you've just had a big drop in price the last 3 years. So people feel a lot more comfortable. We're down around $1,100. They feel a lot more comfortable putting it in there. They don't see as much risk. They see a chance of maybe making a little money while they're in a safe haven, so-called.
Mm-hmm. In addition to being a currency, gold is also a commodity.
Right.
And we have seen the other commodity prices dropping, oil being the biggest example of that. But as you said, the industrial metals, nickel, lead, the iron ores, we've seen that spread over as well to steel, some other areas in the commodities as well, not necessarily agricultural commodities. That's a little bit different.
Right.
And I think it affected the precious metals as well, pushing prices lower.
Right.
Can we see lower commodity prices and still see precious metals moving a little bit higher?
Well, I think what happens, there's certain times that people look at gold and silver as a commodity, and there's certain times they look at it more as a financial investment. And that seems to make a difference on whether they move with commodities or move the opposite of commodities. And so in my experience, when people are really scared, they're scared there could be a stock market drop, there could be something economically going on, then gold starts looking like a financial investment rather than simply a commodity. And I talked about that last year, that gold and silver were simply commodities. They were going down with copper, going down with, the other commodities. And now it seems like they're breaking away a little bit. Oil's under $30 a barrel. I mean, what was it, down to 25 or something last week?
Not quite,
but pretty close.
Pretty close.
I liked filling up my car for $1.60 something.
Yeah, it wasn't that nice.
It wasn't that nice. That was great.
That can continue for a while.
That'd be okay.
Take the money, save it, buy some gold coins.
Yeah. And, gold, it's not like gold's running away, but it stopped its decline, and it's kind of jumping back up around. It's kind of establishing itself around $1,100. And people just seem to feel comfortable. They want somewhere else to go where they don't feel like they're at a great risk.
Now, if gold is disconnecting from the commodities on a broader plane there and is being looked at more as a currency now, we used to look at the dollar versus gold, and the old thing was dollar down, gold up,
Right.
dollar up, gold down. There was an
Exactly.
inverse relationship. Dollar's been strong lately, though.
Yeah, gold is still held up, which
Yeah,
kind of
good
tells
point.
me it is more of a financial investment right now.
And the next question is, will the dollar continue to hold up?
That's a good question.
What are your thoughts?
Well, I don't think it can. I mean, long term, I don't think the dollar can hold up.
Why? I'm asking you some tough questions.
Yeah,
here.
I know. I just, I think it's overvalued right now. I think there's dollars out there that are going to be coming back as China starts spending them. I just think the value of the dollar has been held up because all the money that's been given out has gone to the bank and has never gotten into the economy.
Okay.
Does that make sense?
Yeah, that does make sense, actually. And really, if we think about it, the dollar, things go in cycles. Gold goes down for a while, it'll come back.
Right.
Dollar goes up for a while, it'll come back, more than likely. I mean, the rest of the world's economies and currencies aren't looking that strong. The dollar can't go too much higher without harming other currencies.
Right.
And that gets to be problematic, and there are a lot of these emerging markets that are saying, hey, no more rate increases from the Fed this year.
Right.
Now, they may
That's
do,
not looking very good right now.
Yeah, they may do another one, I don't know.
Right.
But I don't think they're going to do 4 this year.
Well, at some
At
point,
all.
the dollar being so strong hurts our economy too.
It can. I mean, I know the Fed and the Treasury likes a strong dollar, but you can go too far.
Right.
What are you looking at specifically? And let's run through a couple of the metals: gold, silver, platinum specifically. You said that you'd seen a lot of St. Gaudens coming in. Clearly, that's not your preferred thing to
Right.
bring up to a client.
Right.
So what are you recommending?
As we mentioned earlier, I stick just with the bullion coins for most people. I would recommend the American Eagles, just a 1 ounce gold coin, 1 ounce, 10th ounce, quarter ounce, half ounce. The 1 ounce gold buffalo. If some people like maple leafs or pandas, or there's just a huge variety. Australia makes a kangaroo. I mean, there's all different kinds of gold coins.
Is there any advantage to going with Canadian or Australian or Austrian or?
Not really. They're all bullion coins. You could buy a maple leaf and maybe save $10 from the price of a gold eagle. So it's kind of a personal preference. When you sell it, you get $10 less. But they're all within, $10 or $15 price-wise of each other. So
Okay, so it's just personal preference. at
it's
that
really
point.
personal preference. I mean, some people just... I like the U.S. coins because they have a couple little benefits that may or may not matter as far as reporting and things like that. I mean, you have to pay taxes if you make money. It's just a matter of the dealer reports them. So the government gives our coins these little things that I'm not sure matter a lot, but they appeal to people.
Silver, what do you like?
I like the Silver Eagles, which is the 1 ounce coin, and I also like the junk silver right now. That's the old quarters, dimes, and halves.
Sure. The pre-63?
It's pre-65, so 64
Pre-65.
and earlier.
Okay.
Last summer the premium on those was so high you couldn't get near them. They were paying $7 to $10 over spot for those coins. Right now they're back down to $2 to $2.50 over spot. So that, again, the premiums are back down to normal areas.